Welcome to Short View Trading. This is your morning market hit for Monday, 20th of November. My name is Chris Watling. I'm the Chief Market Strategist and CEO of Long View Economics and Short View Trading. And what we want to get into in these videos is how do you go about trading equity markets, in particular equity index futures like S&P500 futures, FTSE, NASDAQ, DAX and so on. How do you go about trading them on a 1 to 2 week basis? What do you need to look at? What factors do you need to watch? And what factors really count when you go about making that decision whether to move long or short equity index futures? So let's dig in. Well, the first thing to think about when you're trading markets on that short 1 to 2 week time frame is emotion, market emotion, greed and fear. And you want to lean against it primarily. And of course, coming into late October, the market had become really quite fearful. It had been selling off since late July, a 3-month downtrend. And as a result, positioning had moved quite meaningfully, such that the market was really pretty short. But since that time, though, the S&P's up really quite sharply. Over the last couple of weeks, 2 or 3 weeks, up around 10%. 400 points on the equity market index over the course of that short time frame, highlighting that overwhelmingly short positioning as you got into the end of October and the sudden short covering rally that we've seen since that time. But in the last few days, the market started to consolidate. If you look at the S&P500 futures, the chart we're putting up in front of you now, the back 3 days of last week, post the CPI Tuesday surge, Wednesday, Thursday, Friday, the market really moved sideways, consolidating those gains. Equally, if you look at the NASDAQ 100, it's a similar pattern. 3 days of sideways, consolidation of those strong gains of the past few weeks. And then on top of that, you look broader in the US market, you look at the small and mid caps. They rallied very, very sharply over the course of the last few weeks. But in both instances, or all three instances, if you like, they're back at their 200-day moving average, a key resistance level. Look at the chart of the Russell 2000 that we're putting up in front of you now. This is the US mid-caps. Equally, the S&P500 is a different US mid-caps index, similar sort of point, about the 200-day moving average. And also for the S&P 600, the small caps in the States, once again, back up at their 200-day moving average resistance level. And then layer on top of that what a whole bunch of our short-term 1 to 2 week market timing models are saying. Up in front of you now, we're pulling up the short-term technical scoring system for the S&P 500. Back on sell and suggesting the market's a little bit overstretched in the near term. Equally, a whole bunch of other short-term market timing models, short-term risk appetite models, other sorts of put to call ratios that we look at, all back on sell. But if it is a change in medium-term trend, going from risk-off regime to risk-on, as potentially it was a couple of weeks ago, then it often pays to ignore, at least initially, many of those short-term sell signals as they're overwhelmed by the unwinding of short positioning and the surge in markets in the initial few weeks of a risk-on move. That's the key consideration at this juncture. And that's what we dig into each and every day in our Rag Trader product that we publish on the website. If you're interested in a free trial, please click on the link below. It'll be our pleasure to send it to you for a few weeks. All you need to put in is your name and email address, no credit card details required, and we'll send you the Rag Trader for a few weeks trial to see if you find it useful, if it's the sort of product that you're interested in subscribing to. So what are we watching today and this week? Well, there's a bunch of stuff going on, but of course, first and most importantly, it's Thanksgiving week in the States, so volumes will be quieter, markets will be closed on Thursday, half day Friday, and a much quieter week generally in terms of trading. But elsewhere across Europe and early on in the week in the States, there's quite a bit of key macro data coming out, flash PMIs out of Europe on Wednesday and then the States on Friday, but also other bits and pieces of data including US leading economic indicators and durable goods orders. And then over and above that, I think we have one of the key earnings reports coming out this week, Nvidia on Tuesday. That'll be watched closely. You may remember in August when they reported fantastic earnings, blowout earnings. The stock popped on the earnings and then sold off dramatically over coming weeks. So that's it from us. That's your morning market hit for Monday, 20th of November. Thank you for listening. Please do subscribe to these videos on YouTube and like and share on social media, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.